Bitcoin's something that I invest in. It's something probably most of you invest in, indirectly or directly. I know there's now Bitcoin ETFs that you can buy into. And one of the things I think is interesting is this report here, because it rings true with me. And I want to bring you back. Bitcoin has to basically either run through the ceiling or run below the floor. Steven, you ready for this one?
All right.
The interest on the life insurance policies loans is higher than other lenders. Ooh. Someone doesn't understand mathematics. Yes, it is. Holy shit. Bob, you're right, buddy. The interest that the insurance companies charge, and right now it can be anywhere between 3% with some carriers and 4%. Can you borrow from the bank at a cheaper rate than you can from the insurance company? Steven, what's the rule?
I believe you can. And this Bob guy sounds like Jen Psaki up there just spitting out bullshit is what I think.
That's right. Let's circle back to that, Bob. All right,
Bob. Show you the truth.
Yeah. Bob, we're going to give you a shot at this. Simple mathematics. If you understand compound interest and we start with $10,000 and that $10,000 earns 6%, how much money do you have? Please let us know. That's right, $10,600. So the next year, you're starting with how much if you're going to compound on that? Is it $10,000 or is it $10,600? Bob, for the new car, what is your answer? That's right, Bob. You're compounding on $10,600 and you didn't have to work any fucking harder to make any more money. It's called compound interest. Now, if we understand compound interest, let's go to round number 2, Bob. All we want to know now, Bob, is because, hey, if you can borrow cheaper from the banks than you can from the insurance companies, let me know this. And this is for the grand prize, a fully expense-paid trip to Hawaii for you and your significant other or your mistress. Whichever way you want to go, we're going to provide you a fully paid trip to Hawaii if you can get this question right. Can you, Bob, go to your bank and take out $10,600 from your bank and then have the bank pay you interest on that $10,600 after you've taken it out? Time's going, Bob. What's the answer here? We got 30 seconds on the clock. Will the bank pay you interest on the money in your bank when you take it all out?
Ready, go. Tick, tock, tick, tock, tick, tock, tick, go.
That is an incorrect answer. The bank will not pay you any interest if you take all the money out of the bank. As a matter of fact, motherfuckers don't even pay any interest right now, even if you keep the money in the bank. So, Bob, thank you for playing with us today. I'm sorry you're not going to be taking your mistress to Hawaii, but thanks for playing anyway. Folks, we get so caught up in this game of numbers because we don't understand simple mathematics. And here's the thing. He's talking about life insurance, right? A whole life policy, whether it's specially designed or not. But when you borrow from the insurance company, the borrow rate, depending on whether you have the old contracts before 7702 or the new ones, the borrow rate was anywhere between 3 and let's just say 5%. Usually it's 1% more than the guaranteed rate. So if you're borrowing at, let's just say 5%, like the policies that Steven and I have before 7702, we're borrowing from the insurance company at 5%. But you see, when the insurance company gives us the money that we have in our account never actually leaves our account. Therefore, we continue to earn uninterrupted compound interest on every single penny that we earn, on every single penny that we deposit. We never lose the interest earning potential. 2 plus 2. Oh, wait, go back to that. Damn it. Get rid of that little advertisement, them bastards. 2 plus 2. They really want us to buy that. 2 plus 2 may or may not equal 4. That is correct, folks. So
they're canceling. They're trying to cancel math in California. My point is, what happens in California spreads to other blue states over time, and eventually, possibly the U.S. So if you think that it's bad now, just wait till they stop teaching actual math in school.
Oh, man. So basically all I'm trying to say, folks, is you can't beat compound interest. It's the most powerful thing in the financial universe, says Albert Einstein. Those that understand it earn it. Those that don't pay it. If you tap into uninterrupted compound interest, even if you're paying a higher interest rate, to the insurance company, your money gets to continually work at a higher rate than what you're paying. So you make the spread. This is what hedge funds do every single day. This is what banks do every single day. That's why they simply have more money than Bob does, because Bob isn't getting that trip to Hawaii because he simply doesn't understand uninterrupted compound interest, and 2 + 2 may or may not equal 4. We get so caught up in the numbers that we just don't. We miss out on so much. And not only that, let me go round 2 for Bob, just as an education. Banks are the #1 purchasers of whole life insurance in the world. Look it up. Google BOLI, and you will find that banks buy more whole life than anyone else. And you got to ask yourself, is it because they're stupid, or do they know something you don't know, Bob? Well, they know something you don't know, Bob. And the thing that they understand, the biggest thing that they understand, is how it works. They understand compound interest. They understand tax-free. They understand all these things that sometimes we seem to forget. But let me go one more round. Since the banks are the #1 purchasers, if you had yourself one of those stupid whole life policies, says Dave Ramsey, if you had one of those that had cash value, could you or could you not go into pretty much any bank and say, hey, listen, I've got this whole life policy with 10 grand in cash value. I would like a $10,000 loan today, and I don't want to fill out any of that stupid paperwork, maybe just my name, address, and some other stuff. Can you give me a line of credit secured by that cash value? What is your answer? The bank will gladly smile and say, well, Mr. Bob, you are in the right place today. We are glad to give you a cash value line of credit on that wonderful whole life policy, because it is a risk-free loan for the bank. We will take a collateral assignment of that whole life policy, meaning that no matter what, if you stop paying us, we get paid. If you die, we get paid. We can't lose. So we are willing to give you access to 100% of your cash value at a rate of about 3%. So can we borrow from the banks while collateralizing and leveraging our whole life policies? Yes, sir. And that's exactly what I do. I household all 8 of my stupid whole life policies into one line of credit, and I use that money at 3. And how much money do I make? Well, I'm making 6% with dividends, but you see, I'm making a hell of a lot more than 6% because every year my money's compounding on a higher amount, and it just keeps on going. So every day I get wealthier without having to work any harder, without having to work any longer, and without having to take on any fucking risk. Holy shit, it's Christmas fucking time. You just learned something you all need to know. Woo! Man, I hope you guys like that. But we had somebody else that said I was stupid. Said, you make stupid comments on gas prices and then don't answer the question. Oh, well, actually, you're probably right, sweet 1971. Stephen, sweet 1971 is 100% right. We make stupid comments about the gas prices, but we don't give any answers or any solutions. So can we just try to get some solutions? Larry Steinhaus has just jumped on here. He likes to argue, but what is the solution for gas?
Energy independence was a good start, which we had prior to the cancellation of the latest pipeline and some other deals that turned it away from us, where we now no longer are energy independent and relying on people like OPEC and begging them to keep prices low and things like that again. So that probably could have been a good start. I mean, where do you want to go with this?
I don't know. I don't really know what this person wants. They said you make stupid comments on gas prices and don't answer the questions. Let's see. Sweet 1971 said gas prices is 17, 18, and 9. Oh, they want to know the gas prices in 2017, 18, and 19. Can we get somebody to fact check that? And see, Tyler, no, we are not talking about IULs. I don't know where everybody thinks that. Only in an IUL is the arbitrage. Bob, you're a fucking idiot. You are so fucking brainwashed. Just keep paying commissions to all the brokers that sell you the IULs. Oh, I'm sorry. You must be one of the fucking brokers that's making 90 to 120% commissions on those IULs. Go somewhere else, fuckface. I'm so sick of fucking IUL people that think that that's the fucking silver bullet. You motherfuckers are going to be out of business. In whole life will continue to be the #1 choice that banks use and that will be used for IBC. It will never be IULs because they don't work. If you want to buy an IUL, I hope you got a longer term time horizon, and I hope the markets keep going to the moon like they are. And if you all think the markets are going to keep going up, you are fucking delusional. That's why this is what the F happened, because I am fucking on fire now. Let's go. Let's go. All right. What do we got, Stephen?
Yeah, well, Larry says we are getting energy from our enemies. What could go wrong, right? But
Right.
this
Well,
is the
nothing
evolution
can
of
go
gas.
wrong.
So, I mean, gas prices go up and down and up and down and up and down and up and down, right? And again, we don't even, I mean, we're not blaming anybody for this. We're just showing you what's happening. Gas prices were low. A new administration takes over. They make a bunch of policy changes. They cancel a bunch of energy independence things like pipelines. And all of a sudden, gas prices double, almost triple within a year. Now they're bragging and celebrating gas prices coming down 10 cents, which is fucking bullshit. That's all we're saying.
Yeah. So, I don't know what the reason for it was, why that person wanted to know more about the gas prices, but I guess there they are. If you really just look, I mean, we kind of have to look at it. Where were gas prices in those years? Well, I don't know. It's right there in front of you. In 2021, 285, 2008, 411. And, you can kind of bounce around, but I guess I don't quite understand the reasoning for that, because what does the past have to do with anything about today? I think we should really just focus on how much money does it cost to fill your tank up today, because that's the problem at hand. We can't change what happened in the past, but we certainly can learn from the past to understand where we might be going, and where we might be going if we continue on this path is not going to be a pretty picture unless we can get this entire country on electric. And if we do that, we crash the electrical grid. And I hope you guys love the world of just darkness, because that's probably what happened.
We have some comments coming through on YouTube, Chris.
Let's hit them, man, because I've been giving way too much attention over here to TikTok and Mr. Bob Price. Mr. Bob Price is the IUL guy, and IUL, I'm not saying IULs are good or bad. I'm just saying they have to be used for the right type of strategy. And if you think an IUL is the only way to earn an arbitrage, then you simply have no fucking idea what an arbitrage even is. And you have no idea how mathematics even fucking works, because I got to just stop there. I got one more topic that I really, really, really need to hit, Stephen. And I'm done talking about specially designed whole lives. If people want to learn about it, they can just join us today. Let's talk Bitcoin. You all about Bitcoin?
Yeah.
All right. Well, here's what I did this morning. So I read a lot of economic reports, and I follow a lot of economists. And, Bitcoin's something that I invest in. It's something probably most of you invest in, indirectly or directly. I know there's now Bitcoin ETFs that you can buy into, but you're really buying into the futures. You're not buying direct Bitcoin or direct Ethereum. You're buying into futures. And one of the things I think is interesting is this report here, because it rings true with me. And I want to bring you back. Can you see this, Stephen? And I'm going to turn TikTok here so that they can see this. And I'm going to make sure that Instagram can see my little chart here. So here's what we got. This is Bitcoin. And granted, this is not to scale. I did it as close as I could to the chart here, which is to scale. And I just wanted it nice and big so you guys could see it. So it's December 2020 all the way through December 21st. So this is going to chart the path of Bitcoin. And what I've done is I put support and resistance levels on each of these. And, Stephen, you've been listening to me about Bitcoin. I'm not an expert, but I work with really smart people like Spencer Montgomery, and they teach me a lot about Bitcoin. But I do understand investing, and I do understand rules of investing. So support and resistance lines are important. And I have been trading, initially, I was trading off of 30 and 40. I'm not an early adopter, so I did not capture the upside in Bitcoin early on. So I missed out on all the stuff prior. But I was trading this range here. Okay, I traded 30 to 40, which I think were the best lines or the best levels, because here we've got lots of touches at these levels that show that this is a strong support and resistance line. You can see we've hit it many, many times. But then I was also playing 40 and 50, because that also proved to be a pretty darn strong level of support. And again, there's more of it. But if we were to trade and play off of these different levels, what we will find is there's a lot of money to be made, because you could have bought anywhere in this lower range and sold here. Bought here, sold here. And, most people would have waited because they think that it's going to the moon. Everybody thinks it's going to the moon, but I don't think you're going to see 80,000 before year end like we initially thought. And the reason I don't think so is because over here is where we're at right now. We've been trading along these same levels, the 40 and 50 range, and we basically have to make a decision. Bitcoin has to basically either run through the ceiling or run below the floor. And, it can go both ways. We could go up above. We could kind of push through this, but based on the current trend, based on the current markets and everything else, and based on the news, and if you don't think Bitcoin or crypto is correlated to the stock market, you're not comparing them. We've already done the analysis. Andrew has gotten into his nerd mode and really put those levels together to show that there's definitely a correlation between the stock market and Bitcoin. And some would even say that Bitcoin is leading indicator for the stock market. Either way you look at it, my bet is that Bitcoin is not going to break through, maybe in 2022, but not before the end. And my fear is with Bitcoin, we very easily could run down to the $29,000 level, the 30,000 level. We very easily could go from where we're at today down to 30,000 with some bad news, with the Fed raising or stopping their bond buyback program, or not stopping it, slowing it down. Or maybe the Fed starts raising interest rates too high to curb the 6.8% inflation. A lot of dominoes out there. We're just waiting for one of them to fall. So when you're doing Bitcoin or anything else, just be very cautious on how you're trading it. If you're just buying and dollar cost averaging, you're probably good. Just keep doing what you're doing. But if you're buying it at the, every time it goes high, because too many people love to buy at these levels because it feels good, right? How many of you bought at 68 because you thought it was going to the moon? You thought it was going to 120. That's what everybody said. Not looking so good today. Oh, but it'll come back. Well, maybe, maybe not. But smart investors trade the levels. I just wanted to put this up here because I thought it was really interesting because it really proves the point that Bitcoin is probably going to be around for a long time, but you're better off with this right now because of the intense volatility to trade the levels and be very smart about it, or learn from someone like Spencer Montgomery. But I definitely love Bitcoin. I think it's definitely got legs. I think, all the shit coins and altcoins, I don't think many of them will be around through the whole thing. But I certainly think that if you're an investor and you're putting money into Bitcoin and Ethereum, you're probably going to be okay. You might take some lumps, but if you hang in there, you'll probably make it through. But, it's just like when you read these economic reports, the next support level is all the way down to the bottom of the trend line at 29,341. Through the July lows, after that, it could crash as low as 4,000 to 7,000 between late 2022 and 2023. So, and then it also goes on to say, but if Bitcoin is topped, it means that stocks also could have topped recently as November 2022. So I know a lot of people have a lot of money in crypto, and I'm just kind of pointing it out that that's where we're at. These are the levels, and it's going to go one way or the other. And you just got to make a very smart, educated decision. Are you going to sell high and take your gains, or are you going to buy, or are you going to sell low and lose money? It's tough. Bad financial advice. I'm not giving you financial advice. I'm showing you the numbers. I'm not giving any financial advice. Let's see. Don't trade Bitcoin, buy and hold it. Now, so Crypto Legend said, don't trade Bitcoin, buy and hold it. Now, I already said that, so he obviously missed it. I think that's very smart. If you're buying it, dollar cost averaging into it, it's very smart to hold it for the long haul. Just explaining like this is potentially where you could go. But if you're in it for the long haul, you're probably going to be pretty good. Even if the government came out with their own digital currency, and this is coming from Spencer, even if they did, there'd be an initial drop in the price of Bitcoin, but there's a finite amount of it. So therefore, it probably will still continue to hold value, be a great store of value for some of your money. How much? I don't know. He says no more than 10% of your investable assets. So Crypto Legend, I totally agree with you. I'm not disagreeing with that. I don't know what Ethan thinks is bad advice for crypto. Chris, you can buy and hold it. Yep.
It's definitely in its infancy stage still too, right? All this crypto stuff, the NFTs. I mean, I was working with Larry Steinhaus of Investor Schooling over the weekend, and he's doing a fun little thing where he created an NFT and he's bidding it out just so everybody can kind of hop on and learn how to bid on and purchase NFTs and go through the process. And one thing I learned while going through that and bidding on his NFT was the fees are very, very high still. Yeah, and it reminds me of back when I used to do like options trading on some of those platforms. We pay like $40, $50 for some of these options contracts, and the fees were real high. And these days you can hop on these various platforms, and I think it's free, or basically free. I mean, stock trading is now free, right? There's no charges. So it's come a long way. And crypto, we see all these real high fees right now, and the NFT fees and converting the Ethereum and mining fees and all the stuff that's out there. I mean, it amounted to like 30% of what I was bidding on top of was just going to additional fees. So it reminds me of that. But as those fees come down, as more of it's adoptive, I mean, I could see this thing running,
I totally agree. And I think the fees will come down. Somebody just made a comment. There are many cryptos that already don't have the massive fees. And I think you're going to see as this gets more adopted. I think right now, I just heard it when I was out in one of these masterminds. What is it? it's like less than 5% of people own crypto right now, which is a very small percentage of the investor population. So I think as it becomes more mainstream, as more and more people adopt crypto, I think the fees will certainly have to come down. Coinbase is ripping people off in a big way. And I agree, that it definitely will be something that eventually, won't be as expensive to trade. But for right now, we're focused on what's right now. And I agree with, what's his name that said, I gave, I wasn't trying to give advice. I was telling you how I see it, but I'm an old Wall Street guy. So, maybe this doesn't work for your investment strategy where, you trade off the levels. This has just worked really well for me because I'm very risk averse. I don't like risk. I don't want to hold it to 68 and then ride it down to 7,000. Not saying that's going to happen, but I just don't. I'd rather buy low and sell high off of the different ranges. Now it takes a little bit of work, like, about 30 seconds a day. I got to actually look at my account and decide whether or not I'm going to take my gains or I'm going to roll it. But I always trade off of my levels, whether that's good or bad, depending on someone's investment strategy. That's for them to decide, not for you to say that that's bad advice. It's really not bad advice. It's just my strategy and how I do it. And it's worked well for me. Could I have made a lot more money buying and holding? Damn well, yes. But Ethan, I promise you, I will eventually buy and hold. But when it gets down to a lower level that I'm comfortable buying in at, based on my research and based on the people smarter than me. So there's a lot of experts out there right now. There's a lot of scammers and fraudsters out there right now trying to tell you that they are the best advice. I don't know what the best advice is. I listen to people that have been in this for a very long period of time that understand this. And I then make my own assumptions based on my investment strategy, my risk tolerances, and that's how I trade. And I suggest that that's how everybody else trades. And Bob is just on fire. He just keeps going. I knew Nelson Nash. Actually, unfortunately, I never met Nelson Nash, but my partner certainly did. And all the people that are in our organization that, were there in Birmingham, they have met Nelson Nash. I do have an IBC practitioner's certification. Do you have one of those, Bob? You wouldn't, because you can't, they don't talk about IBC. This Bob guy is unbelievable. And I'm not going to delete Bob. I'm not going to block Bob because, I think there's something I can learn from Bob and I think Bob can learn from us. But it sounds a lot like Bob has arrived. Stephen, you know all about the arrival syndrome, right? Bob has arrived at a point where he seems, or at least from what I can judge based on his comments, to know everything. So unfortunately, I don't take advice from people that have arrived because unfortunately, when you think you know everything, you lack knowledge because you have closed off your creativity part and you have also closed off your ability to learn more. So I'm not sure. I'm happy that you met Nelson Nash. Sounds like a pretty amazing human being to know. And outside of that, then
it reminds me of this right here, Chris. This was sent over from one of our followers in our network. And by the way, if you guys see really good news stories or articles or things you'd like to discuss with us, send them over to us. Where can they do that, Chris? On the Facebook channel? Would that be the best place for now?
Yeah, probably one of our Facebook groups or my page. You can go to Chris Naugle or at the Chris Naugle on any of the Facebook pages, or you can go to our different groups. We have real estate groups. We have the infinite banking group, and we also have the money school group. So whichever one you can send us a comment.
And this right here was sent over from somebody. It just says, the Meta attorney. So Meta is the rename of Facebook now, right? So Facebook fact check labels are opinions. So labels placed on posts on Facebook accompanying so-called fact checks are opinions, says the lawyers for the social media platform's parent company said in a recent court filing. So it just goes to what you're saying, that when you think that you're an expert on something, all of a sudden it's just flipped on its head and everything that you thought was fact, maybe it was really just opinion. So be careful what you're listening and following out there, because as Larry's saying right now in the comments, too many shoe shine boys are out there right now. And you want to explain that, Chris?
Oh man. Yeah. Kennedy Sr., and you guys can look this up and Google it or watch a YouTube video about Kennedy Sr. and the shoe shine boy. Back then they got their shoes shined a lot and he was getting his shoes shined, and the shoe shine boy was giving him stock tips. And Kennedy, being an avid trader, an avid investor, and, pretty high profile guy, started thinking to himself, if the shoe shine boy knows more about stocks than I do, this might be the point where I should exit the markets. And he did. And he got out of the markets, ended up shorting the markets and made oodles of money during the Great Depression. But, there's a lot more to that shoe shine story. Today, the shoe shine boy is the Uber driver, the Lyft driver, your coworker, the person on TikTok who, is the guru who knows everything, And listen, I'm on TikTok. I'm giving advice on TikTok. Some of the advice is great. Some of it is not appropriate for you. Infinite banking concept is not appropriate for everybody. I will be first to say that. And I say no to people all the time, and they get pissed off at me because I tell them this won't work for you. Well, it won't work for you if you're not subscribing to the laws of wealth. Law number one, before anything will ever work for you with any kind of investing, you got to be keeping at least 1/10 of the money that you earn, your gross income. If you're not saving 10% of the money you earn, then how in the hell can any investment strategy work for you if you don't know how to keep your money? If you make it and you spend it, you make it and you spend it, you got nothing left, none of it works. Law number two is you got to make your money work for you, which does not mean park your money in a bank account, which does not mean put your money in a CD, which does not mean park your money in something and just leave it sit. It means your money's got to work for you. I'm writing a book on that called the Laws of Wealth, and you guys can check it out when it's done. But, too many people think that every investment strategy works for everybody, and it does not. Bitcoin might be good for some and bad for others. Stock investing might be good for some, bad for others. 401k is good for some, bad for others. There is no silver bullet. Infinite banking concept, not the silver bullet. It doesn't work for every scenario for everyone. It works for a lot of them, and that's who we help. Let's call it the 5%ers. We help the 5% that want help. The other people that have arrived, that think they know everything, that don't think this works, good. Keep doing what you're doing. It's obviously working because you're bitching too much that you're broke and you don't have any money. But everybody right now seems to be riding high on the horse. Everybody right now seems to have great money, good incomes. But when you don't, let's talk, because then maybe you'll be open to learning something new. Because I know when everybody's making money, when all the markets are high, when your job's paying you good income, it's hard to want to learn something new because you think you've learned everything. And just because you're doing fairly well, you think there's nothing more for you to know. But trust me, because I did this, I thought I knew everything as an advisor. And then all of a sudden, when I lost it all in 2008 and again in 2014, I started to look around and say, wait a second, I maybe don't know everything. And I started looking to those smarter than me. I started looking to the ultra wealthy, the billionaires, the multimillionaires to say, what are they doing different than what I'm doing? And what I found is they were doing everything different. They weren't doing what I was doing as an advisor. They were doing something totally different. And high-level advisors, which I work with some of them, not all, high-level advisors also do things different for their clients. The question is, are you tapped into that knowledge? Do you know what the wealthy do with money that you don't? The answer should be yes, I would hope. But if it's not, maybe you have more to learn.
Listen, Chris, we're willing to help 100% of everybody, right? That wants to learn. Unfortunately, 95% of people are never going to either seek out advice or be willing to listen and implement what they learn. So for us, we actually kind of need those kinds of people though, because to be the 5%, when you're at the top of a market and you want to sell, what do you need to be able to sell? You need a buyer. Right? So if somebody's uneducated and they're willing to buy up here, I need that person to be able to sell to so I can cash out when things are at the top like they are right now. So that's what makes the world go round, and it's going to continue for eternity.
Yeah, and that's what Larry said. 2008 is coming again. I think 1929 is coming again. I think we're going to see the next Great Depression more so than we're going to see the next Great Recession. But nobody knows, and you can't time the market, so it's pointless to try. If you're a trader, continue to keep trading. It doesn't matter, because if you trade for the day and you don't hold long, then there's really no way you're going to get hurt. Well, you can, but there's really limited risks if you do it right. That's what Larry teaches. He's an options trader, and he's probably dead on right. But you know what? People like Larry, people like me, and people like Steven, if the next Great Depression happened or 2008 happened again, do you know what will happen for us? We'll become wealthier because we understand how to trade that. We understand that presents opportunities. But for the average person, it means that they're going to probably lose their job. It means that they might lose their house. It means that they're going to go through hard times. But you know what? Hard times create strong men. And if you haven't read that book by my friend Stefan Arnio, my late friend Stefan Arnio, you should read that. It is a good one. And then I love Sean Dinnan's Does Bob Have a Good Handshake? I don't know, man. Sean, I haven't shook his hand yet, but I will someday. And then he said, I would like to wrestle him. So, Bob, there's a challenge on the table. Sean would love to wrestle you. So take it. That would be fun, and we're going to have to video that. So I'm going to send my film crew out to wherever you guys set up this wrestling match, and we are going to see Sean wrestle Bob Price, and that is going to be epic. What else we got here, Steven?
I saw this quote yesterday from Socrates. The more I learn, the less I realize I know. And it's so true, because, if you would have told me in 2018 about infinite banking, I would have told you you're full of shit. And then when I actually opened my mind to learn about it, it's really literally the most powerful financial vehicle I've ever seen. And like you were saying earlier, if somebody can challenge us and show us something better, I'd love to see it, because I do have an open mind no matter what. But I just absolutely love that quote. And you got to keep an open mind. You got to realize you just don't know what you don't know. And I think Will Rogers says it best, right?
Yeah, Will Rogers says the biggest problem in America is not what people don't know. The biggest problem is what people think they know that just ain't so. And I would say Bob Price fits right into there. Bob, the problem isn't what you don't know, bud. The problem is what you think you know that just ain't so. We'll see you at 1 o'clock for the Wealth Webinar Series, where we get to prove to you what arbitrage is and what a spread is and why the banks use whole life and not IUL. And that is going to be a great challenge. And for that, Stephen, this has been an epic show. I literally have that little tickle in my throat from yelling so much. That means we succeeded. All right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.